Welcome to TradersArmy.com, defending your right to build wealth and preserve capital for generations to come. Tuesday. What's up, everybody? Tuesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a great weekend. Happy Martin Luther King Jr. Day. Belated, I guess it would be, as we had a down day in the markets yesterday. Nothing was happening. So in the sessions right now, we're down about 10 points in the S&P, about 36 points in the NASDAQ as we are pulling back just a little bit. So let's go ahead and dive right in. A couple of things that are on the charts. We had a live trade room last night looking at some different opportunities in the markets. And so we're going to review kind of what those ones were right now. So a couple of things. Last night we were looking at the markets. We looked at a potential breakdown below this area here. Unfortunately, we didn't get any basing that occurred before the breakdown. And so we did not get into the level. The trade just didn't set up effectively for a potential entry on the breakdown. So I left that area in place, though, because on a 15-minute chart, we have a little wick over wick here that still might be valid. So this actually occurred while we were in the room. We didn't take the short primarily because it was just a little bit on the weak side. Now, it came in all the way to a level of demand, which we had identified, and it gave us a little touch and go off of that demand level. But we looked at this as a potential confirmation entry based on the time of day that it was created. So with that being a confirmation entry, the second time it came into the level, which was right after the European market opened, we got about a 3-to-1 move away from that zone. So that trade worked out very well. My guess is most people were asleep and didn't grab that level, which is fine. I don't feel like it's got enough legs in it to hold for a second day, but the turning point was spot on. So now let's see if we get a little reversal at this area here. Now understand this, that's a 15-minute supply level in the context of a bigger picture 4-hour upward trend. So the probabilities of that are lower, but it represents a really nice reward to risk scenario when you've got a level that's so small. All you need is a few points to make this worthwhile when you've got a level as thin as this level is. Moving our attention over to the NASDAQ, we can see in the NASDAQ, we didn't quite make it to the reversal level that we had spoken about last night, and it popped away from that area. So this has to switch to a confirmation entry at this point. If you decide to do it at all, remembering that it's lower probability, just coming close means it switches to a confirmation entry. I wouldn't look at any potential short on the NASDAQ as it has been our strongest market recently, but we do have a supply level right up here. If you do want to give this a shot, there's that little wick over wick 15-minute supply area where we could see a little bit of price turn, change directions out of there. In crude oil, so crude oil we had looked at last night, a potential area right up in here in this wick over wick level. This is, my favorite levels are those wick over wick areas. Price came down away from there. We got a really nice move up, but we unfortunately were not able to get back into it, and then we got a really strong sell-off from that point. So I'm going to leave this wick over wick area intact here, and my overall opinion was that we would continue to trade down in crude oil. My target is that it's going to get down to around that 56 area. In the overnights, we fell pretty hard. I've got a very clean level here. This is a clean zone, but it's the time of day is horrendous. So I'm not going to wrap anything around it. I want to see price at a point where I've got a better reversal opportunity. And I don't really see a good 4-hour demand area until about 56.50. So that's really probably a better target. So really a rally up into one of these levels could set up for a candle-to-candle short. I just don't have a clean supply area to lean on the hourly chart. On the 15-minute chart, this area is even better. So you know what? I am going to wrap my lines around it, but I'm going to put an asterisk, if you will, in my own brain about the quality of the level because of the time of day it was created. Doesn't mean that it won't work, by the way. It's still a very quality level as far as structure of a zone goes. And the structure of the zone could be enough. Looking at gold next. So in gold, we had looked at a potential iron condor last night in the gold markets, 1606 by 1539. I think it was 1535 actually, or 1540. But it was a fairly wide zone. So if that's something that you are interested in, that level was something we looked at in an iron condor. If you don't know about trading options on futures, I would recommend that you learn a bit more on options on futures. They are a very useful trading tool. Looking at our bonds and currency markets, didn't have a whole lot in here to really lean on. So inside of the bonds, we have this little area here where we've got a resistance area that we've bounced off of a couple of times, and it's still sitting up there waiting for price to kind of pop above. So since it's still sitting there waiting for price to kind of get above there, we are getting a little basing in front of the level that could become a breakout to the upside. Now, that would be much more enticing if we saw that the S&P reversed off of one of its supply levels, right? So if this demand level gets reversed off of, while then I think it would make the S&P goes down, then I think this bond trade gets more exciting. Looking at the Aussie, so the Aussie, we'd looked at a potential breakdown below this blue line here. We actually got a little touch below the level last night. So if you had a set it and forget it trade, then you got into the position, and it's going exactly the opposite way we want it to go at the moment. It hasn't hit where our stop would be as of yet, but it's not looking good, frankly, at this point. So 1, 2, 3, 4, we're about 4 to 5 candles in. And so we'll see if we get a little bit of a move away. We are putting in a decent little potential tweezer reversal at the moment, and we are near the end. This candle here is about to be printed, so this would look like a really nice potential, two tweezer selling pressure. Next leg would be down kind of setup. So trade isn't dead, but it's definitely on life support at this point. The euro, we saw a little bit of a gap up in the euro position. Didn't look at this to be a gap and go kind of scenario based on what we were looking at last night, and have a supply level up in here at the 15-minute zone as really our next best, most highly probable area. It would be this area right in here. That's a tiny little zone, but it's decent time of day as far as when it was formed and created. When I go to the much bigger chart, the 4-hour chart, I think that our better probabilities are for price to continue to come down, and that's what I'm kind of leaning on in this case. Looking at the Canadian dollar, we've got a potential breakdown below here. We touched it in the overnight hours and literally bounced off of it, so that level is still valid. If you are so inclined, there's a potential for a reversal, frankly, right here, that you could go candle to candle on that area and see what that gives us at this point. Great British Pound and Japanese Yen. So we were looking at this one last night, and inside the pound, we had a breakdown really below this area here. And if you're more aggressive, you actually had another opportunity at this level below here. So depending on your level of aggression. Now, in the overnights, we rallied hard in the pound away from those zones. Doesn't mean those levels are dead. It just means that I've got to rethink them when price returns to those areas. As far as supply goes up above me, looking at my 4-hour, it does look like we're putting in a bit of a 4-hour base. And so, this is sideways price action. But if we get above this, this high wick here, then I'm going to start looking for buying opportunities on the smaller time frame. And then inside the Japanese yen, we are in a very much sideways price action. We have a potential, we had a potential breakout above this area in here with a little target just above it for a very small trade, but really nothing is occurring in this one, and so I'm not going to add anything to the list. We're just going to leave the trades as they were. One of the things I want you all to notice as we go through this is that we use the same lines on the charts, right? We don't remove them. From week to week, those levels are still valid, and we're going to continue to lean on and use those levels as the market gives us opportunities to do so. So if you guys have any questions, please send us an email, support@tradersarmy.com. Until tomorrow, everybody, I hope you have a phenomenal day. See ya.